It strikes me that there's a decent chance that in the next 6 to 18 months, something's going to break. And if and when something breaks, that's when we get the big print.
Yep.
That's when they just turn on the fire hoses again. And on the next big print, Bitcoin's 250 and, gold's 5,000.
Lepard turns his attention to Bitcoin, which he describes as being trapped in a bull flag, a consolidation pattern that often precedes explosive upward movement. Drawing parallels between gold's recent rise and Bitcoin's current technical setup, he anticipates that Bitcoin will break out of its range soon, possibly reaching $100,000 by the end of the year. He attributes this bullish forecast to an eventual shift in Federal Reserve policy, suggesting that when the Fed pivots towards more accommodative measures, Bitcoin will respond with a sharp rally. Once Bitcoin enters a bull run, Lepard notes, it tends to sustain momentum and overshoot its intrinsic value temporarily. While predicting a potential price target of $200,000 within the next year, he cautions against chasing the rally at extreme highs. His strategy emphasizes accumulating Bitcoin at current levels, which he believes represent the lower end of fair value.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Silver's right on the cusp of break. So gold's broken out, clearly. I mean, it's like running wild, right? I mean, and all the gold shorts are in a lot of trouble. Silver is right on the cusp. Go look at the silver charts. Look at my thread on Twitter. I've got some good charts there. It's like right on the cusp. Silver goes through 32.50. It's going to 40.
On a 40,
and, yeah. And so that's important. And Bitcoin is making a giant bull flag, and kind of trapped in this range that it's in. And based on your numbers, you just said, kind of 60-day lag. Well, I think gold started hitting these highs, probably a little less than 60 days ago. So, I mean, it would not surprise me to see, Bitcoin take off. And I think I said this in another podcast. I tend to believe that I think Bitcoin might be 100,000 at the end of this year. I think there's a decent chance that, that something is going to break. The Fed's going to have to be more accommodative than everybody thought. And seeing that, gold is going to continue to run, silver will run harder, and Bitcoin will break out of that flag. And when it does, we all know how it trades. I mean, when it gets on a bull run, it doesn't stop. So it'll get overvalued, by the way. I mean, there'll be a point maybe when it's at 200,000 sometime next year where, I'm not sure I would be adding to my stack. I'm not going to sell any, but I'm not sure I would add. But today at 60, it appears to be kind of in the low end of the fair valued range, and so I'm very comfortable buying it here, which I am. So it's hard to say though, Dante. I mean, there are kind of two things. I mean, there's the what's it going to do, just assuming they hold the system together. And I think in that case, gold goes to 3,000 and Bitcoin goes to 100,000 or so. I think there's always kind of the wild card though, which is that, Lynn has a great chart on this, they've got to create money or else the system breaks. But they try to avoid creating money knowing that it's inflationary. And so usually they do it too long and then something breaks, like the repo crisis in 2019 or COVID in 2020 or, the housing in 2008. And we don't know exactly when, but it strikes me that there's a decent chance that in the next 6 to 18 months, something's going to break. Something major is going to break. Some bank's going to fail. Some basis trade's going to blow up. Some CRE company is going to really take down some big organization. Whatever it might be, it's going to be deemed as, oh, who could have seen this coming? This is a crisis. We got to deal with it. And they're going to go back to ZIRP. They're going to go back to QE. Who knows? Maybe the bond market's going to fall hard, and they're going to go. They're going to go to yield curve control and say, we're not going to let the 10-year or they kind of did verbal yield curve control last fall when the 10-year went over 5% and they were still hiking rates. And within the space of 2 weeks, about 15 Fed governors came out and said, oh, no, the cycle's over. The market's doing its job for us. And because they didn't like it over 5%, right? And it immediately came back down into the high threes. So, something, in my opinion, something could break. And if and when something breaks, that's when we get the big print.
Yeah.
That's when they just turn on the fire hoses again. And on the next big print, Bitcoin's 250 and, gold's 5,000. I mean, it's kind of my guess.
Oh yeah.
But I can't tell you that that's tomorrow or that's 18 months from now. I don't think it's years from now. I think it's because I think mathematically they'll the system's going to start to break down if there isn't more printing. So gold is very good at sniffing out monetary debasement. It's been doing it for hundreds and hundreds of years, right?
Right.
And so, look, I mean, what we see central banks buying record amounts of gold. We see, more and more countries interacting with each other, trading in their own currencies, and then net settling in gold, and not net settling in the dollar. I mean, and the U.S., a lot of this is self-inflicted wounds. I mean, the U.S., deciding to grab say whatever you want about Russia, good, bad, or otherwise, grabbing $600 billion worth of their bonds, while it might have felt good at the time when they did it, it was really a stupid move because it basically said to the entire world, hey, do something the U.S. doesn't like, they're going to steal your money. And so people started, all the Arab states, I'm sure, took note of that. The Europeans, a lot of people took note of that, and they're trading, between themselves without using a dollar. I mean, the Russians are accepting the rupee from India for oil and gas, and the Chinese are, purchasing oil and gas with the yuan. And, if it turns out the Middle Eastern states end up with too many yuan, they can't buy enough things from China, they'll just net settle in gold and just kind of skip the dollar. And so, these trends are there, and I think are likely just to accelerate. And that's the thing. The thing about good investing is you've got to be able to see around the corner, and you've got to project these trends out multiple years. And
Lepard discusses the Federal Reserve's unstated mandate, ensuring the smooth functioning of financial markets. While the Fed officially aims for full employment and price stability, its true priority is to safeguard the banking system. Lepard argues that the Fed has repeatedly intervened to protect markets, and it will do so again in the next crisis. He predicts that when markets falter, the Fed will reintroduce policies like yield curve control to cap bond yields and prevent a collapse in confidence. These interventions, however, come at a cost, primarily through inflation and currency debasement. Lepard warns that investors who fail to anticipate these shifts will be left behind. Holding assets like gold, silver, and Bitcoin offers a hedge against the Fed's inevitable return to money printing.
The nice thing about Bitcoin is we've got 15 years of this asset absolutely crushing every other fiat asset. Yeah. And so, when somebody says to me it's going to fall or it's not going to work, I'm saying, okay, why? Based on what's going to cause this to change? I explain it to me. Is the protocol going to fail? Okay, well, that would definitely be a problem. Is supercomputing going to come along and cause, all the private keys to be hacked? Well, that would be a problem. But absent something like that, I just don't see how this doesn't continue to become, to remain the best performing financial asset in the history of the world. And so to me, it's so obvious that, people need to own some of this. Now, if you can't stand the volatility, that's great. The way, any good investment manager will tell you, the way you deal with something that's too volatile, it has huge upside bias, or asymmetry, but is volatile, is you manage your position size. You don't put 100% of your money in Bitcoin. I would never counsel that for anyone. I have a lot in it, but not 100%. And, but you don't need 100%. If it's going to do a 100 bagger, or even if it's only going to do a 10 bagger, and you've got 10%, in Bitcoin, that's going to have a very meaningful impact on, your financial condition in 5 or 10 years. And I think a 10 bagger is assured within, I subscribe, and I know some Bitcoiners will shit at me for this, but I actually think the power law is pretty descriptive. If you look backwards, it's actually, had a nice R-squared correlation with reality, and it could break. All models are born to break, and it could break to the upside if we have hyper Bitcoinization. But absent that, at a conservative level, I very strongly believe the power law will predict the future price of Bitcoin. And if you look at that, if you look at Fred's work or Giovanni's work, you'll see that we're going to be at $1 million in 10 years. We're going to get there. So they've got to focus on full employment and price stability, which they then went on to define as 2% inflation, which is, how that's stable, I don't know. But set that aside. The third unwritten Fed mandate is functioning financial markets.
Yeah, they're the bankers. They're the central bank for the banks.
Right. Yeah. The backstop. The reason the Fed was created, right?
Yeah.
It's a one-way ticket to protect the banks, and so, so we know, and we've seen it. We've seen this movie so many times that, we're kind of getting hip to their game. And, there'll be some other crisis. I mean, some say that maybe they're going to try and start a war and they'll use that as the excuse. I mean, I have no idea knowing what the excuse will be, but there will be a monetary problem of some sort, in the years ahead, and it will lead to another big print. And that will lead to massive debasement, just like the last one. I mean, I'm still stunned at how much the cost of living for all of us has gone up pre-COVID to today. I mean, it's kind of 40-50% across the board, and the next one will be as bad or worse. And, that's really sad because, the cotillionnairs can figure out how to benefit from it, but the rest of us need to buy food and gasoline, and it costs more. So, so that, that's what we have to look forward to, sadly. But, we can drain their system.
Yeah.
And the way we drain their system is we just don't play. We don't save in fiat. We don't store our money in banks. We become self-sovereign. We try and convince more and more people to be like us.
Yeah.
We cheer on the people buying gold at Costco, even though it's gold, not Bitcoin. We cheer them on because they're buying real money and holding that in lieu of fake money or, money that the other side lies about. And, when it gets to the point where nobody will accept the other side's money, their power is gone. I mean, they can't start wars. They can't do anything. Their power is completely gone. So that's what we need to get to. We need to get to the point where everybody in this country understands that, and we all vote with our feet and our money. And, the dollar goes to zero. And, then the world will be remade by sound money people who I frankly trust a lot more to run the world than the people who are running it now.
Lawrence Lepard's insights provide a compelling case for holding hard assets amid an uncertain financial environment. His message is clear. The Fed's actions, geopolitical shifts, and the growing distrust in fiat currencies are setting the stage for explosive growth in gold, silver, and Bitcoin. For investors, the key is to anticipate these trends and act before the market catches up. While volatility is unavoidable, managing position sizes and maintaining a long-term perspective can help mitigate risks. Lepard believes that those who position themselves correctly today, with exposure to gold, silver, and Bitcoin, stand to benefit immensely as the financial system evolves. As central banks print more money and the global economy shifts, these assets will continue to outperform, providing both protection and opportunity in the years to come.
Please like and subscribe my channel.